What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit notification bells so you don't miss future videos. So I made a post in the community section. Make sure you make a comment in the comment section about dividend stocks you want me to review. These are actually great picks that you guys made in the comment section. And again, I'm pumping out videos like crazy. I'm going to try to get 5 or more a week. So I'm going to do a stock analysis and dividend stock analysis on these companies. They're actually 3 great companies. So make sure you smash that like button. And again, you got to hit that notification bell so you don't miss future videos. Let's check these stocks out right now. The first stock that you guys requested, and I like this one, is Ugi Corporation. It's sitting at $34.95. It has a dividend yield of 3.95%. PE ratio is 7.01. Volume is 2.54 million US dollars. Its market cap is 7.35 billion. Its year range is 3305 to 4855. Its day range was 3483 to 3516. Its previous close was 3503. So right there is a dividend stock. It's not doing too hot against the S&P. That can be attractive because, if it's way too expensive, I mean, can you really afford it? So, it's kind of stagnant, took a little bit of a hit during the pandemic. It's slowly trying to recover. Let's check these guys out. Right here, this is what I like. International Energy Distribution Company. International distributor and marketer of energy products and services, including natural gas, LPG, electricity, and renewable solutions with well-developed infrastructure in key markets. So right here, it says that they're a holding company that distributes and markets energy products and services throughout their subsidiaries, and the company's common stock is balanced growth and income investment. UGI Corporation has paid a common dividend for more than 137 consecutive years. Here's some natural gas right here, natural gas and electric utility, UGI Energy Services. So retail energy marketing, midstream assets, electricity generation, HVAC. HVAC is pretty important during the winter and the summer. UGI International distribution of liquefied petroleum gas and energy marketing in Europe. AmeriGas, nation's largest retail propane distribution. Hank Hill would be very happy right now. So look at this territory. 139 years, 18 countries, 3 million customers, 11,000 employees, and 4 diversified businesses. So already that's very attractive. So they're well diversified. Diversity is important with companies, and that's one thing that I find very attractive with these guys. How much revenue have they been generating? That's what we need to know. All right, so this is millions US dollars. So 6,691, 5,685, 6,120, 7,651, then 7,320 in 2019, 2020, 6,559. You can kind of say that's a given because of the pandemic. So they have improved over time. Just 2015 to 2021, they have slightly improved with their revenue, which makes them attractive as a company. They're not losing money. They seem like they are pretty on the ball with their customers and everything. And again, this is not financial advice for entertainment purposes, only disclaimer in the description, but the revenue trends are not too bad. But the big thing is the moolah. What's in the dividends? What's the dividend trends? What's the dividend hikes? What's the dividend history? That's what we want to know as dividend investors. Let's check that out. Let's study the trends real quick with these guys. I'm on Seeking Alpha. So 2014, it went from 19 cents to 21 cents. Then it went from 21 to 22 in 2015. Then 2016, 22 to 23 cents. Then 23 to 25 cents. Then 25 to 26 cents in 2018. 2019, 26 to 32. Then 2020, 32 to 33. And then 2021, 33 to 34. And again, 34.5. So right here, the price and dividend history, again, these guys were hurting with the pandemic. Dividend history in the past 5 years looks like it's slowly going up. So the consecutive years of dividend growth with UGI is 18 years. Sector median is 7 years. Consecutive years of dividend payments, 34 years. Sector median is 22 years. So one thing, again, this is not financial advice for entertainment purposes, only disclaimer in the description. But again, the trends are there. It's This one is, I would say, undervalued, and I just like the trends. Now, I don't care what this says. I like the dividend hikes, I like the revenue, and I like seeing if they're in demand. Let's jump to the next dividend stock. This is a stock that in the past 5 years was beating the S&P, and then it took a little bit of a hit. So there's a dip there. That's Cummins, CMI, sitting at 209.33 with a dividend yield of 2.77%, PE ratio of 14.33, a volume of 1.43 million US dollars. Market cap is 29.81 billion. Year range is 189.50 to 273.65. Look at that dip. Day range is 206.57 to 210.50, and its previous close was 209.67. What makes these guys so special, and what do I like about these guys as a dividend stock? More than 9,000 locations around the world, the service is always nearby. When you're in a remote location in the heart of the city, count on us to support you with thousands of service locations, connected solutions that minimize downtime and expert support throughout your equipment's life cycle. So, that's one thing that I like about these guys already. So one more thing is their products. Look what they bring. Just maintenance kits, turbo for diesel, merchandise, batteries, fluid analysis, data link adapters, overhaul kits, service tools. I mean, this is stuff that people need. People have cars still. Yes, it doesn't matter what type of car. You have an electric or a gas-powered. These guys carry a lot of stuff. So that's one thing that's very popular about these guys, and people need transportation. So that's one thing that these guys are in demand with. And I mean, I can go over all these products. I mean, there's just so many products that they carry. I mean, it would take an hour just to go over that. So that's one thing that they bring to the table, and their revenue is fantastic. Look at this revenue by Cummins. So 19,000, then it went to 17,000. This is in millions US dollars. 20,000, 23, then 19,000, then 24,000. So they rebounded significantly. They have improved drastically from 2016 to 2021 with their revenue, which makes them a very attractive dividend stock, and they're in demand. I mean, I just went over a brief, kind of like a brief review on these guys. And they have just so many products that make them so attractive. And they're well diversified with their products that they carry. It's not just, this, that, these, and those. This is a lot of things that people need. So you just saw their website, which I went over, and I went over very briefly. But this is what makes these guys attractive, is their revenue and their dividend history, which I'll show you. And look at these dividend hikes. 2013, 62 cents. 2014, 78 cents, 2015, 97, then it hit 102, then it hit 108, then 114, then 131, then 135, then 145, and it has a dividend yield of 2.81%, a PE ratio of 14.37, annual dividend of 580 right now. So that's a very attractive dividend growth stock. Let's check the final stock. And we're going over the American Public global investment management firm that everybody talks about and everybody loves, and it has a 3.25% dividend yield. T. Rowe price sitting at 147.63. The dividend yield is 3.25%. PE ratio is 11.25. The volume is 1.96 million. The market cap is 34.09 billion US dollars. And look at that dip. I mean, it's still beating the S&P in it, and it has a significant dip, which makes it a very attractive traditional and/or Roth IRA stock because it's increasing its dividend, which I'll show you shortly. Its revenue is doing well, and it's destroying the S&P in the past 5 years. Your range is 133.07 to 224.56. Look at that dip. The day range is 147.13 to 148.65, and its previous close was 149.44. The dip is there. That's all I have to say. Now let's go over their revenue and their dividend history. I'm not going to really go over in detail about these guys. They're just such a big company, and the revenue has done so well. I'm not going to go in depth with that. I mean, they can back it up significantly. Wanted to go over Cummins and UGI because some people aren't familiar with those companies. This one, everybody knows about them. Let's check out their revenue and their dividend history. One other thing with T. Rowe is they have a pretty good stock split history. So 1990, 2 for 1, 1993, 2 for 1, 1996, 2-for-1, 1998, 2-for-1, and 2006, 2-for-1. Let's go over their revenue and their dividend history. So 2015, they were at 4,200. 2016, 4,284. 2017, 4,854. 2018, 5,372. Again, millions of US dollars. 2019, 5,617. 2020, 6,206. 2021, 7,671. So you're seeing the increase in revenue, which makes these guys attractive. They have a stock split history, what I just went over. Let's check out their dividend history. So check this out. 2006, you see the stock split right there. 2007, 17 cents, 24 cents. So let's just look at 2007, 17 cents. And it jumps to 24. I wanted to go all the way at the bottom to show you guys how fast these guys are blowing up. 2009, 25. 2010, 27. 2011, 31 cents. 2012, 34 cents. Look at that special dividend right there for $1. Then it hit 38 cents. 2014, 44 cents. Then it hit 52, and you got that special dividend right there, which is nice. 2015, 52 cents. 2016, 54 cents. 2017, 57 cents. Then you hit 70 cents in 2018, 2019, 76 cents. 2020, 90 cents. 2021, 108, and you got that special dividend. And now it's jumping up to 120, and it's sitting at 147.84, which is a very attractive dividend stock right now. According to NASDAQ.com, it is 3.21% with a dividend yield and annual dividend of $4.80. So if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will post a kind of a speed run tomorrow on an individual dividend stock that people really like. I'll tell you what I think about it. And again, that none of this is financial advice for entertainment purposes, only disclaimer in the description. You guys have a good one and happy Dividend Warrior Wednesday. Take care.